Hi, welcome to CoinDesk Live. I'm Pete Rizzo, editor at CoinDesk, and today, of course, Bitcoin is back at 2019 highs, so we're bringing you interviews with crypto markets experts here to break down the whys and the hows of what's going on. If you've been asleep since you deleted your Coinbase in frustration in 2018, these interviews are designed to welcome you back to the conversation. To my left, the person who will do that this time around is Teddy Fusaro, COO at Bitwise Asset Management, a provider of managed crypto investment services. So let's take people into the market today. Obviously, we're back at 2019 highs. Were some lows earlier this year. What is your perspective? How are you looking at this this moment in time? Are we on the start of something big? Are you cautious? What's your outlook right now?
Yeah, so I think that long term, we are very bullish on the overall trajectory of how Bitcoin will perform.
Sure.
I think we have a moment right now that is really being driven by three things, and I'll call it the three Fs.
Oh, okay. My soundbite. Do it up.
We have the Fed.
Okay.
We have Facebook, and we have FOMO, fear of missing out.
Right.
And against that backdrop, I think that is what we're seeing happening in the Bitcoin market, in the cryptocurrency markets right now. And the thing that I think is unique right now is we really haven't started to see the type of retail participation that we've seen in past bull markets.
Yes.
So I think those are really the things that are driving dynamics right now, and I can talk a little bit more about each of those if you're interested.
Yeah, definitely. So let's get into. You said the retail investors are not really back in the way that we've seen before. How are you drawing that conclusion? What data are you looking at?
I think that the data we're looking at to think about the fact that we don't think that retail is back en masse yet is both based on our experiences. Now, granted, we market. Our clients tend to be high net worth individuals and institutions. That's really what we think is driving the market right now. But if you look at things like Google search activity, overall search activity for Bitcoin, it's not having that explosive growth that we saw, for example, in late 2017. That says to us that what's sort of driving the participation in this market right now is not hundreds of thousands or even millions of users just going on and downloading apps. We have news like the story that you broke today about Ledger X getting approval from the regulators to bring their new physically settled futures markets to the marketplace in a regulated manner. We continue to see developments at places like ErisX and Bakkt, which is the New York Stock Exchange's sister company that's working on Bitcoin derivatives. We really think that dynamic is what's driving the industry at this point.
So maybe just to focus on why retail investors are important. A lot of people have the thesis that cryptocurrencies are globally accessible. The average retail or the average investor across the globe will be able to get in on this. I think often it's framed as, Bitcoin is one of the largest asymmetric bets that the average person has access to.
Yeah.
Is that still sort of how you look at it? Is that why they're important? Is that why we're looking at retail?
Yeah, I do think that over time, there's no question that retail is maybe the most important segment of this market. That is really what Bitcoin is for, and who Bitcoin users will be over time.
Okay.
But I think so many of the things you think about that are going to have to develop an ecosystem where Bitcoin can really mature into what it needs to become have to be driven by institutional adoption. And this is why I think Libra is so important. You think about one of the Fs that I mentioned earlier, Facebook. They're gonna educate billions of people, 90 million businesses, 2.7 billion users about cryptocurrencies in general. Even if it's not a cryptocurrency itself, and I think purists will rightly point that out, I think that their ability to bring mass adoption, drive the regulatory conversation forward, these are going to be the types of things that need to happen in the back end so that real user adoption at the retail level can actually occur over time.
I want to talk also about something that you guys have been really known for, which is pointing out market inconsistencies. I think one of the interesting things about Bitcoin being back at $11,000 for me is, I guess, earlier this year, a lot of the narrative was defined by we don't understand the data, we don't understand maybe the exchange market enough, maybe a lot of this stuff isn't quite mature. How do you see this rally in the context of the work that you guys have done? Because I think a lot of people's perception was shaped by the report that you submitted to, I think it was the CFTC or Congress, or?
Yeah, so great question. I can talk about that. This is the research that we conducted to present to the Securities and Exchange Commission in support of our proposed Bitcoin exchange-traded fund. And it's another example of why I think it's so important that institutions need to lead the way here before this mass adoption can take place, because individual users aren't going to really be able to come together to clarify these types of dynamics. And really what we were saying in that research report is it has been a market that has been hard to trust over time.
Sure.
We don't know where all this data is coming from. We don't know who's publishing it. We don't know whether you can believe it. And a lot of what our research team did was dig into that data, clean out the garbage, take out the trash, and say, there's a lot of stuff here that is worth questioning. But then once you do that, once you look at what remains, this market is exceptional. It's remarkable. It's incredibly efficient. It's remarkably robust. It's actually more Western than is widely believed. And it works incredibly well, and it should work incredibly well, right? Because of what Bitcoin is. Bitcoin is the world's first globally fungible digital commodity, can be transferred across the globe at any time. And when you think about those things that make it what it is, you should have a market that works really well.
Yeah, I guess just looking at your data, a lot of people may not know this coming to the market, but so it looks like what came out of your research was the Real 10 Index, which I think is published by Masari, which has kind of become a little bit of the industry standard there. So today, reported volume is 22 billion. Real 10 volume is 2 billion. That's obviously a huge difference there. Maybe break down for people what accounts for that spread exactly?
Yeah, so I think that over time, there's been this massive opportunity for anyone with a ability to create a website and publish data to say they have an exchange. And that would lead to other things that they could do to try to attract listings of maybe ICOs, initial coin offerings, lead to search traffic on the web, or even other more nefarious things. But what we also found in this research is that there are a number of exchanges where real Bitcoin trading is taking place.
And what's the difference between those things? How would you even know, and what is the environment like there?
It's hard to know, and this is why the research itself required such heavy lifting on the data front, because we needed to go in and we needed to look at all the trades that they were printing and see how they were printing. And a lot of this is quantitative, right? It can be difficult as a user to look at a screen and you see a website that says, "Hey, we have $500 million worth of Bitcoin volume today." You have no way of interrogating
But this is fake, so people are just putting random orders in. They're not intending to fill, essentially.
Exactly. So what you end up with is the dynamic where these types of websites would effectively just be printing numbers alongside where the current real market of Bitcoin is in order to make it seem like that they have this robust exchange ecosystem to try to attract users and attract other web traffic and maybe attract ICO listings.
So what's changed since the report, though? I mean, it seems like there's still a ton of exchanges out there who are operating under their models.
So here's what I think has changed. I think that the dialogue has changed and the understanding has changed. Not just in the industry, but also in the regulatory community. And I think it was hard to get your mind around this idea that there were billions and billions of dollars of Bitcoin traded, when we all know from experience that the primary use case of Bitcoin right now is people buying it and holding it as a store of value. It's just sort of hard to get your head around this idea that all of these exchanges had these billions and billions of dollars worth of trading volume. I think that we've seen an outpouring of support from the industry. We have relationships with teams like Masari. We've heard from all the major data aggregators. We've heard from all the major real exchanges. Everybody is excited about this because for the industry, everybody who's in the industry should want the truth to be out there. They should want transparency to be there so that people understand exactly what is going on. And it's just sort of a growing pain of the industry. It's this natural development of we have this massive innovation. We have Bitcoin and we have cryptocurrencies all of a sudden. Everybody wants to participate. And some less reputable actors get into the mix and start participating their own way. And I think this is just part of the growing pains of the industry that we're growing out of now. People now have reason, scientific, data-driven reason to believe that the data that we've shown suggests there are a number of exchanges that you can trust. And then when you look at the pricing and the price discovery that occurs on those exchanges and you compare it to a regulated futures market, the CME futures market that exists here in the US, that link in relationship of price is very tight, very explainable dynamic, and that all makes sense too. And I think that's where we see the future, right? The future is people can know which exchanges have real volume on them. People can trust that the data they see is actual data. And I think that's a big part of this institutional-driven development of the space that will, again, tying back to retail users, make a clean, healthy environment for retail users to participate in.
I guess my next question would be, how do you see that within the context of price? So I give you a personal example. So I really bought into the idea that the data in the cryptocurrency ecosystem was bad. And I actually thought that that would be a price depressant on cryptocurrency for longer than I think we've seen. And one of the reasons I thought that was because obviously this ecosystem that's created, there's no one really to police it. You have all these exchanges that are setting prices. They have their own reasons for posting certain volumes. And something I talked with Ryan at Masaria about for a long time was that I just thought it would take years to really get to the point where this stuff was getting cleaned up. It sounds like it's starting. That hasn't really happened, but yet we've seen this price recovery. I guess, how do you see those two things in context? We have a price rally, but we still really have an industry where the fundamentals are questionable.
Yeah, I like where we're going with this. I think that one of the major things that we believe has happened on the back end, and again, I talk about this institutional adoption, is institutional, global market-making firms. Firms like Jane Street, Susquehanna, Cumberland DRW, Jump Trading, they all are now active participants in making two-sided markets in this marketplace.
And that's happened recently, or
yes. I think of the run up in 2017 as driving their need to participate here because they want to make markets.
DRW has been around for a while, right?
Yes, DRW is the earliest entrant, most likely of those that I've mentioned. But I think the institutional scale of them bringing their services into this marketplace has dramatically impacted the real market because. If you're an institutional market making firm that has software brought from decades of experience making markets in equities, futures, ETFs, bonds, any options, any other listed products, you can just take that software and you can bring it over into the cryptocurrency ecosystem, right? And now you know. Now people know. If I'm out making a market on Coinbeanie and this exchange says that it has $600 million worth of average daily volume. And I have the best technology that can get me onto the inside of making the best market, the best offer, and the best bid, but I'm never getting hit or lifted there, then there's no action there, right?
But those exchanges do carry more currencies than the exchanges that are real volume exchanges, right? So there is some reason that people are still using these exchanges, right?
Yeah, I think so. I think that I should say first and primarily our focus has been on Bitcoin itself. Right. So we haven't gone and looked into these dynamics for all other cryptocurrencies.
Well, did you guys have the top 10 index, HODL 10? And
yes.
Is there like a HODL 20? Or?
Right. So good point. Maybe I should make a little distinction about our business. The research that we've conducted and written given presentations to the regulators on and written a white paper on in support of our ETF application, that's all specific to Bitcoin. And that's all in support of our proposed Bitcoin ETF application.
Sure.
All that ETF would do is hold Bitcoin. We do also manage a broader private fund business. In those funds, we hold, as you mentioned, a basket of the top 10 cryptocurrencies.
Right.
Even though we manage those assets, we haven't done the type of comprehensive analysis for those assets to determine where it is they trade on exchanges in the same way that we've done it related to Bitcoin.
Because it's just being held, or what's the?
Yeah, because we think that sort of the benefit of the research is largely driving the questions that arise relative to the ETF application, and we also think that for the next 1, 2, 3 on down, the market structure there is a lot less well developed. So being able to conduct the research would be harder, and then the purpose of conducting that research for us as a firm would not be as specific. But we still believe in the exchanges that we've mentioned. Those we think are exchanges that do have real volume for the other assets that we hold. Although typically when we trade, my preference is to trade from OTC desks to get that exposure. And then we have indexes that you mentioned that are much broader, but those are really just data tools for the rest of the marketplace. So if you want to, so it does pull data from different exchanges, cleans the data to sort of track the performance of all these different lists of crypto assets. But anything outside of the top 10, we don't manage assets related to those. We only manage assets benchmarked to the Bitwise 10 large cap crypto index.
Yeah, I think it's interesting. I think in the crypto market, you're always drawing assumptions off semantics. So I guess the HODL 10 index is based off market cap, which is a whole other sort of numerical counter that people have a lot of problems with themselves, and maybe wasn't addressed in Bitwise. How do you look at these other numbers that people gravitate to? Do you guys put a lot of stock into market cap itself?
Yeah, I think we do use the term market cap, but I agree with you. It's a little bit of a misapplication of the term, right? A market cap should really be applied to equity.
So for people who are at home, it's like when they see market cap, obviously we're just taking the supply of cryptocurrencies and timesing it by the price.
Yeah.
Nothing fancy there. But it has utility. We still use it. We all know that it's kind of a wonky figure, but
right.
Yeah.
And what we do for our indexes from a data perspective is we use a 5-year adjusted inflation projection to calculate what the market cap is or what the outstanding value is in order to weight the cryptocurrency. So we weight the assets in our indexes based on market cap, but that market cap is really an adjustment that's based on 5-year projected supply.
And this is the inflation, so the new supply of these assets?
Yes,
exactly.
Yeah, because as you know, Pete, all these coins can have their own inflation schedules or their own distribution schedules.
Maybe let's bring it back to something a little bit more in the less nuanced area. So is real money moving off the sidelines into this current rally, do you think? Is this, or is there something that you guys have on the research side that points to that?
Yeah, so I think that the way that we think about pricing dynamics in Bitcoin and in other cryptocurrencies is the way that we think about pricing dynamics in the commodities market. So you only have two things, right? You have supply, and then you have demand.
Well, here we also have this other, all these cryptocurrencies can go up in value exponentially, and that can get reinvested also. So
sure, but at the end of the day, right? You have a fixed amount of Bitcoin that's either outstanding, and you have a fixed amount that's coming to market on a daily basis through block rewards.
Sure.
So we think that the only thing that really can drive that price is new money coming in or people selling other assets in order to buy Bitcoin. So certainly our experience in managing our private funds, interest, engagement, investment, and understanding of this market has increased dramatically over the past 18 months. We are seeing new investors come off the sidelines into our private funds. And we think that broadly, that investors are coming into the market now, and that's what's driving this rally.
Let me ask this question another way. What percentage of your customers that you have would you estimate have joined this year versus maybe the companies?
Yeah, that would be a hard statistic to give you off the top of my head.
Sure, yeah.
What I can say is we have had a significant number of new limited partners enter into our private funds this year. We've also seen interesting dynamic that we also see in the sort of institutional and high net worth segment. We hear a lot about hodlers or in crypto Twitter and across the ecosystem. Our high net worth investors and our institutional investors are much like that. Many of them doubled down, increased their investments during the depths of the bear market in late 2018 instead of heading for the hills with their investments down significantly, as we know is the case in 2018.
Right,
They
sure.
came back in for more, and I think that's a dynamic that we see across all strata of investors, which is that once you understand Bitcoin and once you get this concept, it's really hard to walk away from it.
So on the topic of understanding Bitcoin, when people approach you at outings or parties, they ask you, hey, Teddy, what's Bitcoin? What's your elevator pitch these days, or how are you describing the opportunity?
I like that. So again, I think our business is a little different because we are typically having conversations with, as I mentioned before, people who are new to this market.
Sure.
We run our business in the crypto market. We talk to OTCs, we trade with exchanges, we have to manage our business talking with other people who are in deep into the cryptocurrency market. But the people who invest with us are oftentimes people who are coming into this market for the first time. And I think that is the first question. Well, what is Bitcoin?
Right. How do you describe that? Yeah, what's the short answer there?
Yeah. So I think the way that we start is we say that there's an invention. The invention is the public blockchain. Okay. That invention allows for the first time to transfer value over the internet without an intermediary. And the value that you transfer, the thing that you're able to transfer in this peer-to-peer system is a cryptocurrency. And the first one of those is Bitcoin. And the analogy that we use to sort of talk about the dynamic with investors is that think about before the automobile, the use for oil was not massive, right?
Right, yeah.
Now we have a new need for a new commodity. We have the need for a digital commodity to transfer value over the internet in a way that makes the system so much more efficient than it was before by cutting out that middleman, creating this peer-to-peer dynamic. And therefore, the commodity that people need to interact with these systems is the cryptocurrency itself. It is Bitcoin, or maybe in the case of Ethereum, you're talking about Ether, or any other use case. And I think that's also why we talk about indexing as a strategy for long-term holders, long-term investors in the space, is because although we are clearly Bitcoin fans and big believers in it, we do think that this is a story that's going to play out on a multi-decade scale. We don't know which currency is going to be the dominant one over the long term, if there's going to be a number of other use cases that arrive on the scene to power these public blockchains. And we think that index-based investing allows you to have that exposure to the space, be on the theme, and not have to make those decisions along the way.
So you still think that it's, at this point, it's Bitcoin and everything else? That's how investors are looking at it?
I think that if you imagine, it can be hard for folks like us, I think, to imagine having that that steep learning curve.
Here's 2,000 new commodities you can invest in. There
Exactly. Exactly. So there is no question in my mind that the adoption of Bitcoin, the conversation around Bitcoin comes first. But that's reflected. That's reflected in I think the conversations that we have, because people want to talk. They want to learn about Bitcoin. They want to talk about Bitcoin. That's what they've heard about first. And so I think you're right. But I do think that folks who sort of climb that learning curve, go down the rabbit hole, however you want to describe it, they do graduate to looking at all these other use cases. They start asking questions about speed. They start asking questions about scaling. They start envisioning all these other things that you can do on Ethereum, for example. Then, okay, is there someone that's competing with Ethereum? So I think all of these are good questions that educated people do begin to ask.
So do you think Facebook changes that? Are they the new gateway of the conversation, the way that Bitcoin has been? Is that one of the ways that they can be competitive here, you think? Or?
Yeah.
You mentioned one of your three apps.
Facebook changes things in a lot of ways, and that's one of them. I think the biggest thing that Facebook does is that it brings all of these new people into the conversation that maybe weren't going to be in the conversation before. Right? We talk about just the sheer statistics. 2.5 billion users, 90 million businesses are all now going to be exposed to, learn about, think about digital wallets, distributed ledgers, digital currencies, crypto exchanges.
Yeah, I was joking internally. I was like, I can't imagine how many people who own like half a Litecoin just got promoted to head of their R&D division. You know.
Right. But I do. So I think that this is the big deal here. And there are a lot of purists who have their issues with it and point out the criticisms. There are a number of those too. I think they're a real risk.
Do you guys look at it as an opportunity to expand your product line?
I don't think so. No, because we don't include, for example, we at its base, I think Libra is a stable coin. We don't put stable coin. We screen stable coins out of our investment methodology. Right? We don't, because we think there's not. You want. Investors would like to have some upside to price performance. And
I mean, how much of a stablecoin can it be if it's just a basket of assets, though, right? Doesn't it have to fluctuate on some?
Yeah, I think it will fluctuate, but we see it as a stable coin that's pegged to a basket of currencies instead of a stable coin that's just pegged to one currency.
Facebook dollar versus the U.S. dollar.
Yeah, I mean, you start to really think about it, right? Like, I think that if there, if you and you can get crazy, but if Libra is successful, and then billions of people across the world exchange Libra. And it's being backed for, call it a decade, by this basket of dollars, yen, euro. In 10 years or in 15 years, does the basket even need to be there anymore?
Yeah, I was actually thinking about this,
Right?
right? Because like they're competing against the government services, but they're also reliant on them to price the asset, which is very strange.
For now they are, but you think this is sort of the history of dollar backed by gold too, right? At some point,
Sure.
the dollar gained wide enough acceptance that the U.S. government took the peg off of the convertibility away from U.S. dollar to gold. It became unmoored. You can envision a future where if Libra has wide enough acceptance, there doesn't need to be a peg for it. Now, there's a lot that has to happen. That's a very theoretical conversation.
But has that changed the conversations you're having? I think we got a question here on YouTube talking just about global macro context. Are people talking more about Facebook now? Are they talking more global macro, crypto?
Yeah. So here's how it's changed it, right? I had a family member the other day who I hear from every few months.
He's like, why am I not rich yet?
Right. That's always one of the questions.
Yeah.
But this person has never expressed an interest in Bitcoin or in cryptocurrencies. They vaguely understand that, that I work in Bitcoin, right? But I get a question from that person, a detailed question from that person about Libra, about Facebook. What is it? Does it change your view on it? And I think these are the types of questions you can imagine hundreds of millions of people beginning to ask themselves because of the fact that Libra has brought this dialogue. And remember, nothing like this has been attempted before. Bitcoin, think about the humble beginnings of Bitcoin. Satoshi Nakamoto writing code, sending it.
It's a lonely blog.
Right, to a mailing list of
influential
hackers.
but small audience there.
We're now talking about one of the most dominant global companies with some of the most deep resources in the world, pushing regulatory boundaries, pushing concepts of monetary theory, interacting with cryptocurrency exchanges. This is just it's a massive shift with them entering the marketplace, whether or not it's successful.
Sure, yeah, I agree with that.
So I do think it's a big shift.
Yeah, I think my question would just be, I think, why didn't they kind of just put it out there if they were going to launch something? Because now I feel like they've invited all the scrutiny and they haven't yet launched, and I feel like that's a big, might prove problematic for them. So
yeah, I think that if you think about how many vectors of complexity there are with pulling this off, both organizing it, bringing in partners, figuring out the regulatory landscape, getting the proper licensing, designing how they're going to manage it. It's just to do that at a small scale is very challenging. But the way that they're trying to do it, which is in a way that they can do it that's compliant, it's a complicated minefield of regulatory issues to figure out, right? And in a way that works at scale. They can't have a system that breaks. It can't be a test net. So I think that, and that's part of the reason I say this hasn't been tried before, because they're doing it in such a massive, at such a massive scale with such a large organization. And I should also say that the executives that they brought in are people that have decades of exposure to payments businesses. They've had executives from PayPal. So I think in order to implement that the right way with this kind of scale and using the type of technology they want to, I don't see any way that they would have been able to sort of operate it by just bringing it to market.
Yeah, it'll certainly be interesting to see play out. I wonder whether I would personally use it. Still a question I'm asking myself. But I guess winding down here, looking at the rest of the year, one of the things that I think is interesting is that the last rally seems like it was both propelled and then sort of capped by futures trading with the CME and CBOE, which of course now there's no longer a CBOE offering futures trading. But as you mentioned earlier, futures trading is still a really active part of the market. Do you see that putting a cap on this rally? Do you see that maybe short pressure starts to build up? Maybe there's the end of the year, we don't quite see the big run-up that we saw in 2017?
I don't think physically settled futures coming to the market are going to have a negative impact on price discovery. I think that perhaps a dynamic of the end of that other rally that we had in late 2017, closing in early 2018, was the entrance of liquid futures. In a lot of ways, there was no good tool to get short Bitcoin before that, right?
Sure.
So that certainly could have played a role in ending that rally. But I don't expect physically settled futures to have that same dynamic. As a matter of fact, if you think about physically settled futures as a good mechanism for people to get long physical Bitcoin that they didn't have before, right? Because now I can go get long a futures contract. We expect back to have very short-term futures contract, maybe even one day, right? So I can go get long a futures contract, and then I settle and I hold my physical BTC. That's not a dynamic that existed in the CME or CBOE futures markets. So I think there's a way of looking at all the physically settled futures that we expect to come to the market in 2019 as actually spurring more hodling, if you will, as people use it as a tool to get long.
Yeah, I think it's interesting that people always assume that these institutions will short Bitcoin. That's sort of the default assumption, whereas we maybe don't think as much about that they have a lot of incentive to go long.
Yeah, right. And I also think that there's been, I think the expectation in like 2017, 2018 with the institutions are coming was always read as like the institutions are buying or the institutions will be buying. That hasn't really been the way it has played out, and I think with good reason. Think about Facebook as being the institutions coming. The institutions are coming to figure out how to use this technology. How can they use it for their benefit? Think about Fidelity coming online. The institutions are coming. They're coming to figure out how they can support their client base to use this technology. They're not just coming to buy it. Think about Bakkt and RSX. They're coming out to, the institutions are coming, but they're coming to figure out how they can help people access it, the institutional market, trade and hedge, and they're bringing futures markets. Think about the big four audit firms, all having large developing groups of blockchain assurance teams, hundreds of people on staff now, to try to figure out how to properly audit, record, and work with their businesses that they conduct audits for so that they can support businesses that are figuring out ways to use cryptocurrencies and blockchain technology. That's a form of the institutions coming. I think that there is this sort of idea that the institutions coming meant like all hedge funds are going to start buying Bitcoin with massive slugs.
Instant million-dollar Bitcoin.
Right. That's
just a vertical chart.
Exactly. That hasn't happened, nor do I expect that to happen. But I do expect this sort of accelerating pace of business leaders, and then businesses figuring out how can I use it? How can I put it into my business? How can I think about developing with it? And that's the way I think about institutional adoption.
Teddy, appreciate you coming on, and thanks. We'll be right back on CoinDesk Live in about 15, 20 minutes or so. Appreciate the conversation.
Thank you, Pete. Nice to be here.
And welcome back to CoinDesk Live. I'm Pete Rizzo, editor at CoinDesk. Today, Bitcoin is back at 2019 highs. Current price at $11,319 in the CoinDesk Bitcoin Price Index. So we're bringing you interviews today with crypto markets experts to break down the whys and whats of what's happening in the market. To my left, Mr. Nelson Minier. He's the head of OTC sales and trading at Kraken, one of the world's largest cryptocurrency exchanges and oldest, too. Not a bad distinction. So let's talk about the rally. We were talking backstage a little bit. Obviously this year, low of around 3,000. Now we're at highs, almost at 12,000, 11.4, 11.5. Do you think this rally has legs? How does it differ from other rallies you've seen? Give me your take.
Yeah, technically, I think we can get to 13,200 before we find some resistance.
Okay.
And
what's the perspective there?
Yeah, we kind of slowed down there on the way down. And, when you see a lot of trading in a specific range, that usually tells you that, we might see some...
Those historical price indicators, there's just...
Yeah, no, just basically volume. Basically looking at volume and where volume was kind of peaked the last time we kind of came off. For the same reason we thought we were going to have a lot of resistance at 62 to 6,400 because we were there for months. I think that the same philosophy goes through for 13,200, although we kind of broke through 62, 6,400 pretty easily, which is impressive.
Right.
And kind of that breakthrough actually led a lot of us to believe that, that we're going to keep on going pretty aggressively, not this aggressively.
So when you saw it, so from your perspective, doing OTC sales trading, you saw a lot of resistance at 6,000. When that got broken, you were off to the races.
Yeah, pretty much. We thought there was going to be a lot more. Actually, we thought there was going to be as much volume going, as we had when we were there for several months.
Okay.
I thought we were going to see that type of kind of stalling there, but we broke right through it. It seemed like it's pretty good, pretty clean sailing, at least to about 8,000. But I don't think anybody expected us to kind of just keep on going the way we have to 13.
Yeah, for sure. I would put myself in the same boat. So my prediction for the year, I thought we were going to range between 4,000 and probably like 8 or 9. My reasoning for that was just having lived through sort of past down cycles. I think we saw 2016 was sort of kind of a down year, not a lot of interest. Exchanges had large-scale hacks. Maybe this time is different, and maybe kind of we can't always rely on the past to be the indicator, and maybe that's the lesson there.
Yeah, I would have liked to see this rally, and I told this to everybody I speak to, that like 6 months before the halving, because I thought that's real. I mean, when you cut supply in half.
That was Yeah,
when you cut supply in half like that, if you have the same type of demand, even though technologically may have been better, we see more entrants coming in, we see more institutional clients coming in, we see more of the globe getting involved. Even if you maintain the demand where it is, if you cut supply in half, you're going to double in price. So I would have liked to see that kind of gradually come in. So it caught us by surprise, this rally, in the sense that even if we got to 6,000, we thought it was going to be pretty tough sailing to get through that, and then maybe get there through the end of the year, and then maybe about 6 months before the halving, when people start waking up that's actually going to happen.
Yeah, that was my prediction as well, which is why I'm so kind of confused about this rally. So just to maybe catch people at home, I think it's the halving is the reduction in the cyclical rewards of Bitcoin. So if less new Bitcoin is being introduced, the assumption is that the price will have to readjust because miners will have to pay their costs. Usually we've seen the price of Bitcoin rise 6 months in advance that gets priced in. With Litecoin this year around the same, that started happening. Yeah. With Bitcoin, I think one of the reasons we're both saying we're kind of shocked about this is that it seems to be that the price is popping up well in advance of that. I don't know. What's the takeaway?
Well, in OTC, I could tell you some of the flows we've seen at OTC. Sure. We've seen interest from outside of the U.S., which I always thought that places like Latin America,
Is that new,
Asia.
Or?
Well, in this amount, it is new. I always thought that was an area that I traded Latin American bonds for a long time on Wall Street, and if you're above 30 years old in Latin America, whether you're Mexican, Argentinian, Brazilian, even Colombian, going back 20 years, you experience these currency crises. So if people are going to get it, much more even so than the U.S., where we kind of we have the reserve currency of the planet, so you don't have half your wealth being lost.
Yeah, certainly not top of mind.
Yeah, exactly. So I thought areas like that was so we're starting to see that coming around, and also Asian clients are particularly picking up steam. I mean, even in this last rally, you saw some of the exchanges that have more Indian flow, trading a lot at a higher premium than anywhere else in the world. So I think that has a lot to do with the rally.
What do you have to see in the market for you to become convinced that it might be turning the other direction? Like what would you?
A sell-off?
Yeah.
I like to see a stall in prices. I'd like to see prices kind of stall a little bit, and then kind of digest the rally, and people say, "Wait a minute, this is not going farther. We can wait now."
Well, it seems like 3 days we've been around 11.3, 11.4.
Yeah, but it keeps on bouncing, going lower, and then bouncing back. Right when you think that it's going to keep on going down, yeah, it keeps on testing, it keeps on bouncing, and then bouncing back. That's a good sign.
That's been really surprising to me as
Yes,
well.
yes.
Yeah.
You think it's going to head back to 10,000, and then and it bounces right back up.
But I guess maybe catching people up. What are the market dynamics we're talking about here? So psychologically, 10,000 was a big barrier, right? So it feels like being above 10,000, the market, at least the sense that I get, and personally, is that we're kind of testing the waters here, but we might kind of see a short-term pullback.
Sometimes I like to take the flip side of that, though. It's like we've been already to 19,000, so I think the second time around it might be even faster than the first time around. So. It's people know that it can get there. It's been there before. So, when the first time around, who would have thought that? None of us did. I think if you're coming in now, you might be thinking that it's a possibility you can double your money. So, I'm not so sure of that. It feels pretty damn good right now.
So you're thinking like now as an entry point, maybe for people who've been thinking short terms, it's not a bad point.
I think that if you're not involved right now, I think you should put half in, just in case it does rally and goes to the moon, starts moving toward the moon. At least you got half in, and if it goes against you, then at least you have some dry powder to kind of add at lower levels. So Bitcoin's, anybody that tells you they can time the tops or bottoms, it's either a god or a liar.
Sure. Famous Vinny Lingham, R.I.P. to the Oracle.
This doesn't happen.
But I was actually going to bring up, so in 2017 and 2013, one of the things I think was kind of interesting is in both of those markets, and I don't see that now, so I'm curious for your opinion, we saw the emergence of what I would call large sub-asset classes. So in 2017, we saw Ethereum launch. People started raising a lot of money on Ethereum through ICOs, through new token issuance. Money was created there. That money grew exponentially, and it seems that a lot of that money was reinvested back in Bitcoin. 2013, we had the kind of beginning of the alt markets, Litecoin took off with Bitcoin, all these other things. So I think we saw, alternative cryptocurrencies sort of diverge, those grow exponentially, and then money was reinvested. That's sort of one of my reasons where I'm not so bullish on this rally continuing, is because where's that money going to come from? There hasn't been an accumulation in any other parts of the market that can be reinvested here. I don't know. One take.
Well, where the other money is coming from, I think more adoption. I think that if you look at the space, technologically we've improved a lot. You have the advent of Lightning Network. You also have a lot more great podcasts like yourself and others that are going out there and spreading the word.
So you think just more podcasts equals more price?
And also, people have seen this already.
Maybe there's
an
index we can make for that, just podcast, price of Bitcoin per podcast.
but there's a lot of good content out there that wasn't there before. When I first started looking at the space, you had a few guys out there that you're trying to learn from and you speak to people, but it wasn't that much content. Now you can just pull up YouTube and get a lot of information that wasn't there before. Even places like Fidelity are going out there and putting information on their website. Kraken's doing the same thing, and I think there's just a lot more information. You can get up to speed a lot faster. There's some great books out there. So you ask where new money is coming from. I think just more people, more adoption coming in.
Well, I think one of the tricky things, and I was talking with one of our earlier guests backstage about this, is there's sort of this assumption from people who have been in the cryptocurrency market for a long time that the market cap and the total amount of money in cryptocurrencies needs to be large. That it's small now in comparison to what will be a future state where this figure is very large. And I keep trying to re-engineer by working backwards for that and saying, why? What is the root of that assumption? Why does that network have to have a lot of value in it? I'm just curious for your take.
Why is that? Did the conversation start with talking about la volatility? That volatility is going to drop when the prices is very high?
Well, so I think that it's just kind of connecting two ideas here, right? So there's a lot of early investors and proponents of cryptocurrencies who will make the argument that the price of Bitcoin needs to be $1 million, right? They'll just make that argument. Sort of assume that it needs to be worth more, supply and demands, blah, blah, blah. So the market as a whole, if we're going to build this new sort of internet of value, so to speak, if you want to use that buzzword, there's also this assumption that market needs to be very large. So I guess I don't really know how to explain why that's the case.
I've heard that argument in the sense that you need to have a lot of wealth in Bitcoin for it to stabilize. And you need more market participants. I kind of believe that, right? Because if you want to get to a steady state, you need pension funds and new money coming in on a constant rate for that to happen. Right now, we're still at a low valuation in the sense of the potential of it, and you have these 21 million coins that exist at a $200 billion market cap based on today's prices. When does that become more stable? When is that a trillion, or is it 2 trillion, or whatever it is?
Yeah. So this is like price as a metric for adoption, right? I guess that's another way of saying it, right?
Well, I don't know if it's a metric for adoption as much as it is that once you get to when you have bigger players involved, when you have a bigger market, when you have a bigger market, it tends to stabilize things because you're going to have many more sellers but you're going to have a lot more buyers, and then you also have programmed buying. Like say if you're an emerging market fund, you go in there, you have to when your assets grow, you have to go in there and buy. So that creates a kind of steady demand that's there that reduces volatility in the long term. But you need big institutional players, much more adoption, and many other things to go right. And that's probably going to happen at a higher price. So in terms of volatility, yeah, I believe that a higher when a higher price comes around and you have all that adoption and all those new participants coming in, you indeed are going to get more stable prices because of that. Because you'll have people needing to sell, and you also have people needing to buy.
So in the back of your head, when you think about this future state, what's the crazy figure where you're like, oh, that's kind of reasonable? Maybe the Bitcoin market will be worth $2 trillion. That's reasonable.
I think the number that people banty around is 1 trillion. And, I don't know for sure, but a lot of mandates, if you're a pension fund and you need to be in a market, you need to have at least 100 billion of issuance of debt outstanding or whatever it is, some type of market cap that allows you to, because you need the reason they ask for is for liquidity and a few other things. But there are some mandates out there if you're a pension fund or a mutual fund that require a certain limit, a certain market size before you're allowed to invest in it. So to me, in crypto in general, for Bitcoin, it's already been at 100 billion, and it's not like all these institutional guys are coming in. But at 1 trillion, then there's not too many mandates that are going to be out there say you got to be over $1 trillion to be able to play in it.
I guess what I'm trying to get at is for people who are coming into the space, I think it's just kind of confusing to be like with the price as a metric for adoption, where just was what you're saying. So it's like we need the market to be bigger so more players can be in, therefore it should be higher, and therefore it'll need to be bigger, I guess is the logical flow there.
I don't know if it needs to be bigger in the sense that, I think adoption is, when people, when an individual wants to buy it, and when a company or a fund can invest in it or gets the PMs involved in it, or the market becomes mature enough that it allows them to invest in it without them being in a situation where they can lose their job. I mean, I think if you're a pension fund right now and you invest in crypto and crypto drops again 85%, you can lose your job because, you're going to have some manager, some older guy that doesn't know anything about crypto come in and say, what the hell are you doing in this thing? You're fired.
And I'm sure that happened over 2018.
Well, I don't know how many institutions are in it yet. Maybe one guy might have something,
you
but you don't hear a lot of
reality
institutions in it. You don't hear a lot of institutions are in it the way it is. I mean, how much does Fidelity have in their accounts? I'm not so sure, right? I think
we don't know.
I think what we see is them allowing people to trade GBTC in their own personal accounts, but that's a lot different than putting them into their funds.
Let me ask this question another way. So it's $3,000 Bitcoin. It's February, March. There's money on the sideline. Yep. What percentage of that money do you think has now moved into Bitcoin? If we can maybe just abstract question there.
I don't know. I couldn't tell you. I couldn't tell you how much of that money is on there. I think there was a lot of profit taking by a lot of the OGs in the space.
Right.
Many of the crypto funds themselves, a lot of the pros in the space that have come in, they probably started selling when it hit 10,000 the first time, and probably didn't get back in until maybe they started accumulating around 6,000 and scaled back in lower levels. There was a lot of a lot of people in the space were like that had gone through several bear markets. I remember being in it and talking to him, like 10,000. I don't know. I want to sell, and it immediately went up to 19,000.
Right.
And a lot of them were selling all the way down. There was a lot of weathered veterans of the crypto space, as few as they are out there. Put it like this: a big percentage of those were taking profits. So my guess is a lot of that money, if that's what you're suggesting, is back in. As far as institutional and new money in general, there is a lot of education out there, but the big money I don't think is coming to the space yet. I think this is still a lot retail driven. Although I think there's some smarter hedge funds that are getting him out.
So personally, I guess are you looking at alternative cryptocurrencies? Everything that isn't Bitcoin, is that interesting to you, or are you sort of a true blue Bitcoiner, or what's your market thesis?
Well, we trade everything that trades on the Kraken exchange. So if we trade it there and we're comfortable with trading it there, we'll trade it on our OTC desk. As far as me, I like to, as far as I do with my own PA, I mean, I like to keep it close to home. I really believe in Bitcoin. I fell in love with it, 2015, 2016, and my passion's only grown since. So, I wouldn't consider myself a maximalist. I don't, I think there's room for other things, especially when you're talking about experimenting with other new technologies. I mean, Bitcoin, although the Immaculate Conception is very important, I do think that there's
Immaculate Conception?
Yeah,
Satoshi Genesis?
Yeah. Just the fact that the guy disappeared and left us it, right?
Right.
And it's not you can't. There's not one point of failure in a sense. But I do think technologically, I think it's important that we continue to experiment with other assets. Also, in terms of what we're doing in crypto in general. Tokenizing assets, tokenizing other assets, I think is going to be very interesting, and I think that there's future growth there. So for me, the growth has to come geographically, where we get more of the world involved, and then also, in terms of assets, like tokenizing things, and I think there's a bunch of precious metals, for instance, that maybe should be tokenized to give people assets, and then you can trade those versus Bitcoin because we're talking scarcity. So it's very similar. Say, for me, Bitcoin is a better gold. Right, so gold trades versus silver, and maybe Bitcoin should trade versus gold and versus silver and a few other precious metals. So I think there's growth there as well.
Let me ask this question another way. What's changed now that Bitcoin is over $11,000 this year? What does that mean for both the industry and the psychologically in the market?
Yeah, I think that's a great question, and I think the most important thing is that advertising, in the sense that the best advertisement for Bitcoin is higher prices.
Right.
And people get interested.
Sure.
When it was going down and we were in a bear market, interest continued to dwindle all the way down, and people are like, yeah, well, they were right. This thing is dead.
Were you worried? Was there any signs where it was?
Oh yeah, of course I was worried. Of course I was worried. I mean, when you're approaching 3,000 and you had people thinking that it was going to go to 1,000, of course. I mean, I have a lot of my, I own some Bitcoin. I mean, it's horrible when it's going down. But you know what? I was buying all the way down. I mean, and I believed. But was my confidence shaking on the way down? For sure. I'm not one of these guys that was around since 2011, and they got a few more bear cycles in themselves, And, we got guys that have been around for that long, and they don't even look at the price. They know the thing is going up eventually.
Well,
I'm not there yet. I'm not there yet.
Right. It's all about the price entry too at that point, because I feel like they're in at under $100. What do they care? It's like the sky has to really start falling for them to pay attention, I guess. Yeah. Huh. Interesting. So you mentioned, so you kind of came in what year was it again?
Well, I started in 2015, 2016, which when I started.
You came in during the dead market then.
Yeah. I started looking at it. I had, like many others, I had heard about it beforehand. I had a kid on our desk talk to me about it, and I was like, I don't know about that. I don't think governments ever let it exist. And of course, I missed the main point, which was that the whole point is that it's decentralized for a reason. So I didn't see that then. Of course, I don't stand on the end of a bridge and take a swan dive because when I could have bought it then. But I got in early enough where I was happy, and and one of the things that I feel very fortunate about is that I was able to walk away from Wall Street because I had started buying pretty early enough, and it granted me a gift in the sense that I was able to pursue my passion, which is crypto as of this point.
So maybe take me inside the OTC team at Kraken. Obviously, you're the head there. How big is that team? How global are you guys?
Yeah,
what does that look like?
We're 16 people, but that includes our COO, accountants, and things like that. But we have 10 traders globally. We have traders, all over. We have traders on the East Coast, Vegas, San Fran, Tokyo, Singapore, London. So we got traders all over the planet, and we run a 24/7 operation.
That's interesting.
Yeah,
a lot of late
great.
night calls, or
Well, not for me. I got a great team. Fortunately, we were able to build a great team, and some of the traders that we have, better traders than I ever will be, and they do a great job for us.
And they're working with the client. I guess maybe take me through that trade cycle, how it looks like. Somebody calls you on the phone, they hit you up on Snapchat.
Yeah, our minimum size is 100,000, so it's usually somebody that's been around for a while, or somebody that has an affluent person that wants to come in and trade, or a corporation that wants to get involved. Usually the way it works is that we make an email introduction, then somebody from our desk will go out and reach out to them. We usually prefer, after we establish that connection and they get Tier 4 verified, Pro verified, as we say on Kraken now. Once they're verified, they're allowed to trade with us. And we pretty much only have two rules. One is that they're Tier 4 verified, and that if we're sending you money or receiving money from you, is the same account that's the account that you have with Kraken. There's a bunch of other stuff that goes on behind the scenes. They have to KYC, AML, and all those other things, but we don't deal with that, and we have a team that deals with that. And once they've been stamped with that approval, we can pretty much trade with them. And the way it works is that we like to use Signal and WhatsApp. We just feel like that's much more secure. So we establish a connection with them there, and if they're looking to trade, say, hey, listen, I want to buy 1,000 Bitcoins. We make them a price. We trade as principal. We don't trade as an agent, so we're pretty much taking risk when you come in to do a trade with us, and we take that risk, and we have connections, and we try to move it.
How quick is the turnaround there?
Oh, it's pretty quick. I mean, usually depending on how your bank account is set up or whatever, we can everything gets settled within a day.
Huh. Interesting.
Yeah.
Huh. Obviously taking questions here on YouTube and on Twitter, hashtag CoinDesk Live. So maybe moving on to some other topics, just in terms of the market in general. A lot of concern early this year about Tether and things like that. Are you thinking that obviously you deal with the kind of infrastructure of the crypto markets. Have we really matured during the last down? I guess what's your estimation from where we were in 2017? Obviously a lot of concerns about data, a lot of concerns about exchange volumes, whether they were real or not. How do you look at the ecosystem today versus where it was?
I think there's a lot more eyes on it. I think that I think regulation and the regulators are coming and they're paying attention to what's going on. I think that's healthy. I think that as long as they don't come in with a heavy hand and destroy the industry or destroy the industry within their own jurisdiction, which will be a problem, doing a disservice for their own constituents. I think that there's a lot more eyes on it, so they're going to, I think it's good. I think we saw a lot of shenanigans during that period.
I guess what changes for somebody like Kraken, right? I see that you guys are, not the most widely used exchange, but you guys have been around for a long time. Yeah. You got a healthy user base. Institutions are coming in, maybe Fidelity, hearing about Bakkt, all these other things. Like, where do you see you guys and your trajectory as a business? Yeah.
In terms of OTC?
Just in Kraken in general, I guess, as an exchange. What's success for the company?
Well, I'm obviously very biased. I think Kraken is the best crypto exchange on the planet, and we being behind the scenes and behind the curtain, I can tell you that security is the most important thing that we got going. We take holding people's funds very, very seriously. Also, I think that the ethos itself, the crypto ethos, is pretty much embedded in almost all the Kraken employees.
Right. Yeah. You guys do a good job about that.
Yeah, and Jesse, he makes sure of that. You know what I mean? You don't.
Is that part of a questionnaire?
No, I think you kind of in there.
Would you give up your Bitcoin?
Even if you come in a little skeptical, you kind of learn because you're working with people in the same type of thing, and you have these discussions, and it's open minded. It's not like you're going to be ostracized if you think differently. If you think, Bitcoin's a sham. Right. You're going to have to back it up some if you say something like that. But I no, for the most part, people are pretty open-minded, but you learn while you're there, and then you kind of become imbued with the culture and what's going on. So sometimes it's an echo chamber, to be honest. When it was going down, we were all saying, "Oh, it's a good time to buy under 10,000," and then all of a sudden we're facing 3,100, and we're like, "Oh, this is ugly." But for the most part, it's pretty much what how this whole thing started, that whole ethos started. It's embedded in Kraken, and the crypto beliefs are there. And you see a lot of OGs, guys that I kind of followed when I was trying to get into this space, and all of a sudden I'm talking to on a daily basis is pretty cool and neat. We got a bunch of the guys from the Bitcoin Center downtown,
Sure, yeah.
down here in New York, and walking around, and you say, oh my God, I remember that guy in a documentary, and he's walking around. You can talk to him about what he was seeing back then, and when he was trading it for $20 a coin, and it's pretty neat. It's a neat experience to be there.
So somebody who has learning in real time in this market, what is a question that you keep coming back to where you're like, I don't know the answer to that yet, or I'm curious to see how that plays out? I'm curious, what question is top of mind for you?
I wouldn't say top of mind, but a question that I always ask myself is, because, this is all about scarcity Bitcoin, right? So a question that I always ask myself is, what happens if, one of those original Bitcoins move? Like, what does Satoshi do with his keys?
Right.
Like, I suspect that he, if you read some of his writings and things like that, he's really much focused on scarcity. I hope that he thinks that he gave the world a gift. He definitely did.
I mean, that's a huge. He owns what, a 16th of the supply at this point, maybe.
Yeah, there's different estimates from 700,000 to 1.1 million of them. Nobody's sure of that.
I've seen a lot of angry Reddit threads about this.
Yeah, there have been. But I think my view is that I think he gave the world a gift and he knows it, and he's probably had an opportunity to buy him at $20. He doesn't need that type of stuff. He probably burnt his keys. Well, that's what I hope. But I think that's a question that I ask myself all the time.
So your true Satoshi is somebody who just burned their keys and.
I think so. I think he understood what scarcity is about, and that's the most important number in crypto. I think is 21 million, and that finite number is what makes us all want it and cherish it like we do. But that's a question that I think I ask myself often. Are there other questions like that? There's other questions that people ask me all the time about about crypto. I can talk to those about it.
Yeah, sure. What's one that you've been getting lately? Yeah.
The one that I get the most is back to the 21 million, because I think people come to the conclusion that it is and says, why is it that, why is it 21 million when I can just steal the code?
Justin Sun, he was like, there's 8 billion Tron because there's 2 billion, 7 billion people.
Yeah, exactly. Exactly. Yeah. So, people have a hard time understanding that you can't make more than 21 million. And you have to, and it's not an easy answer to give right off the bat. You can't just say, no, well, it's just a code. And we're like, I can copy the code. It's open source, isn't it? So you have to go through the process of explaining it. And even when you do it once, you might have to do it again. And then they come back and ask you questions. But it's a process to understand that. So that's a question that I get pretty often.
And the question is, it's just, how does the supply relate to me? Like
No. Just how do you guarantee there's only 21 million Bitcoin?
Okay. Huh. So people want to understand the economics of the system.
Yeah, they want to understand the economics of the system, and you get people that kind of just brushed over what Bitcoin is, and they say, well, there's 2,000 of them out there. Why is Bitcoin the one that's going to be it? Why are they only 21 million when there's 2,000 other ones? There's some that pretty much copied the code and changed a few lines, and they call themselves something different, and they keep on going. So that's a hurdle that takes a little bit of time for people to understand. It took me a little bit of time to understand back when I started looking at it.
So winding down, maybe a final question here for the people who are due or turning in.
Sure.
What is some advice, some wisdom from your market cycles that you pass on to people for their, maybe not directly like investment advice, but what's something that they should do that maybe they haven't thought about?
I think they really have to understand the space and the economics of what's going on here. I have friends from Wall Street, and they ask me all the time, particularly now with the rally, what is this about? Like, why is this important? And, you would think that people in Wall Street would know. Like, wait a minute, the dollar that's in your pocket, there's probably 50, 60 million new ones being printed a day. And what does that mean for you? And I think that that's something that, I think that the community itself should do more of a job of doing. Guys like Safe Feeding the Moose is doing a great job with the Bitcoin standard of getting that information out there. Like, let's look at this from a different way. Like, what is monetary policy really about? What is scarcity really about? What is Bitcoin really trying to protect you from? And I think those are interesting topics that when you look at Bitcoin and you look at the price rise, people just want to get involved. They want to jump in. They want to make more money. Obviously, we all do. But there's something behind the scenes that's going on that's going to allow that to happen. And understanding that is an awakening. I didn't get that. I was on Wall Street for 20 years, and I didn't understand that. I'm embarrassed to say, but I didn't get that. I didn't know who, the Mises Institute was. I didn't know Austrian economics. I didn't know what all that stuff was. But it's important when you're looking at this stuff.
Nelson, appreciate the time. Thanks
Anytime.
for coming on, and hope that people take your advice and learn a little bit about the space. Appreciate it.
No problem.
Take
Pleasure
care.
meeting you. Take care.
Well, welcome back to CoinDesk Live. I'm Pete Rizzo, editor at CoinDesk. Today, Bitcoin is back at 2019 highs. Current price is $11,319. So we're bringing you interviews with crypto markets experts to break down what's going on, future outlook, and what this means for the industry. Of course, we can answer your questions on YouTube and Twitch. The man who will be talking to me directly to my left is Mr. YinFeng Shao, former head of OTC trading at Circle Internet Financial. Welcome.
Thanks.
So YinFeng, of course, $11,000. It's got a lot of people's attention. How does this specific price figure change the outlook for crypto this year, if at all?
I think it just validates a lot of people who decided to stick around last year more than anything else, right?
So emotional motivation, feel good, romp.
Yeah, I mean, everybody feels better when you're making money, right? I think the story of last year was that even if you sort of outperformed whatever benchmark you put yourself to, crypto is still down 75%.
Some people shorted. Some people shorted though.
Yeah,
there
some
were
people did.
some funds like. Can't remember the research firm, but the famously shorted ETH, I think, for a lot. So there's ways to make money, I guess. Yeah.
There are, but overall, if you are structurally in this space and it's down 80%, you can, your LPs can only really be so happy about that, and so. Yeah,
so just new positivity, but what does that translate to in the market? Does that mean more trading, more volumes? Like, what does that actually mean?
So I think there's sort of a pent-up amount of interest to do something earlier in the year, right? So you had people who are sort of latent buyers trying to scoop a dip in maybe the 4,000, 3,000 range that never came, and so they just had to bite the bullet and buy it higher. Or you had folks who are just like happy to finally see this thing go up a little bit and take profit. So I think you saw sort of a bigger flurry of activity, sort of in the April, May range, especially on the initial pop from sort of 4,000 to 5,500. Since then, it's been more of sort of a grind up, and the question is like, who is actually the marginal buyer in this case?
What's a grind up? Versus a.
So it's just like as opposed to it's sort of just like blowing up overnight. So the 4,000 to 5,500 move happened in the span of 6 hours. Okay. And since then, it's sort of been.
So you mean really the 5 to 8 range, and then before we got to the 8 to 11, which I think was pretty quick, that was just a slow grind, buyers and sellers trying to move it up?
Yeah, I mean, the question is like, where's the money come from, right? And I think like the sort of my Bayesian sort of take on it is that until you can prove to me that it's like new retail money or new institutional money, it's sort of this like large pool of funds that's just sloshing around inside the space, right?
So you think this is crypto OGs, like people who just wanted a good feel-good story?
Yeah, I mean, not necessarily OGs, but it's like people who already put some money into the space, either like have it sitting on an exchange or like have it, have like Bitcoin in a wallet sitting somewhere already, right? Like I think it's them who are really moving right now. I think for the most part, retail, sort of the folks who their first exposure to crypto was late 2017, early 2018. I'm going to guess that most of them are still underwater.
So your thesis is crypto insiders are basically moving the market right now?
Yeah, I mean, insiders is sort of, it's a bit of a loaded term.
Right.
But yeah, it's folks
or people with exposure to crypto before.
Yeah, that's pretty fair.
What would you need to see in the market for you to be convinced that new money is entering, if that's the case?
So I think one thing you really want to see is some sort of temporary dislocation in the markets, right? So at the peak of the mania in like late 2017, early 2018, what you saw was 3 spreads sort of blow out that you thought should be fairly in line. One was Coinbase versus every other exchange, right? Where retail money was pouring into Coinbase. Every single liquidity provider, market maker, trader in the space was trying to sell on Coinbase and yank out their cash, buy Bitcoin somewhere else, and cycle that through again. But you can only do it so fast, so that premium, that Coinbase premium, stayed sticky for a while.
So one of these options was we just saw a ton of volume through Coinbase. We're not seeing that right now.
Well, I think it's a combination of the pipes at Coinbase are better, right? The pipes as a whole in this space are better between sort of the infrastructure that connects exchanges to the traditional banking system, and so it's tougher for that dislocation to stay sticky. And so the other two really vectors that we saw back then were Korea and Japan, where you saw a lot of retail investors out of there, and the premiums there sort of at Japan, I think it top ticked around, stayed sticky around like 20%. And on Korea, I think it's like 30%, in some cases like 50%. So you're really talking about like if you were able to sell one Bitcoin onshore in Korea, right, you can sell it for 50% more, and then you would buy it back for versus USD in the US.
Interesting. Okay, I mean, and we haven't seen Korea and Japan come back into this recent rally.
Yeah, I mean, well, I think Korea and Japan, like, they've sort of, you've kind of tapped into that first wave of interest already. And so the question is, like, is there another one? I'm not sure. I think the most sticky sort of structural arb in our space right now has been Brazil, actually. So it's retail in Brazil that's buying BTC, and then you have some sort of you have a few shops who are able to arb the difference between the onshore in Brazil versus offshore.
How are you seeing that Brazil activity is becoming comparable to these other regions?
It's still not comparable. So we're still talking about like something like a 3 or 4% spread, as opposed to the sort of the 20s and 30s that we saw back in 2017.
Okay.
But you can see that it's sticky.
So you're saying a driver of the whole market was the spread between these markets?
Yeah, to some extent, right? Where it's like at the end of the day, this thing only goes up if there's inflows of cash, right? And
sure.
that inflow just happened to come primarily from Korea, Japan, and then U.S. retail sort of followed back.
And then the arbitrage opportunities?
Exactly. Then the opportunities exist, and people try to then you have traders trying to collapse that, right? But because the pipes aren't exactly well developed or weren't so well developed back then, it takes a while for that to really work itself out.
Huh, interesting. So last time you're saying it went through that stage process. So we saw new markets come online, we saw arbitrage opportunities. So here we haven't seen new markets come online, we haven't seen arbitrage opportunities.
Yeah, I mean it's tough. The harder you have to look at it, right, the more likely it is that it just isn't there.
Sure. Good rule of thumb.
Yeah.
Yeah. Interesting. Okay, so I guess are there other differences you look at 2017 to now? Because obviously we have Facebook bringing a lot of visibility to the space. Are there other X factors here? I mean, obviously, I would expect the next rally to be different from the last rally, right? I guess on some level.
Yeah, I mean, I think the big theme from the last one that has yet to repeat is when Bitcoin really soared to new highs. I think you had a lot of people who were also in crypto rich, right? And they didn't really want to take their money out of the space, so they reinvested it in a lot of altcoins. And so what we really saw was that Bitcoin popped first, right? And on the way down, then everything else kind of had its
you
moment
saw
in the sun.
Bitcoin and then Litecoin and then Ripple. Yeah, and we haven't really seen that yet with this rally.
Yeah, if anything, it's actually been the other way around, where money has primarily been plowed into Bitcoin, right? And to some extent, alts haven't followed. So if you kind of look further down the chain, so all right, well, like ETH and like Ripple and Bitcoin Cash, like those might be holding up okay. But if you go further down the chain, those are like the smaller coins are really the ones which have depreciated in BTC terms.
Once again, take questions, youtube.com/CoinDesk. Yeah, that kind of cuts to one of my theses, which is in 2017, we really saw a divergent asset class, right? So we saw Ethereum and then Ethereum tokens. They caught on fire, huge gains. A lot of that was reinvested in Bitcoin. We're not seeing that this time around. And from my vantage point, it doesn't look likely that that's short to medium term a possibility.
Yeah, I mean, it's sort of, after the first time, right, you're going to have to, there has to be more evidence that like the market really works that way for people to really plow into that trade. I think right now we're probably in a phase where a lot of token offerings, a lot of coins are just trying to figure out a way to differentiate themselves. There was a period of time where if you just said, hey, we're another ICO, that was good enough to sort of get some baseline level of interest, right? And I think that we're past that moment right
now.
So
what are the catalysts that you see? Obviously, Facebook, people had predicted that was going to be big for the space. I think we saw the price impact for that. Are there catalysts that you see looking forward? Backed or these kind of large exchanges, stuff that you think are going to make a difference?
I think it's honestly tough to say. I think like everybody's white whale is still ETF approval, right? I don't put a whole lot of stock in that.
Okay.
Simply because it's been tried so many times and it's been pushed back or delayed or rejected so many times. That's certainly going
to happen eventually, though, right?
Yeah, I mean, eventually, sure. Like if you just
yeah. But it might be priced in, you think, at this point.
Well, I mean, I think that people are still holding out hope for it, right? And so there's always that element. But in terms of if you force me to put a likelihood on it of it happening this year, I'd say it's pretty low.
So you've obviously been in the OT space for a while, OTC space for a while, 5 to 6 years. So the clients that you're seeing coming in now, what's the difference? What are they looking for? How sophisticated are they?
So it's remarkably hasn't changed a whole lot.
Okay, that's interesting.
So I think you're ultimately, like what's holding a lot of people back in this space is just a lack of infrastructure. So certainly in the last 5 years, you've seen like sort of, you've seen great developments in terms of custodians, exchanges, sort of all the infrastructure being built out. But it's still a long ways to go before people are, sort of at the level of comfort that you would sort of trading in your, E-Trade, iBrokers, whatever account. So I think until we sort of get to that point, it still has to be like a lot of investments in the space are driven from top down. So what you see is that folks who have the capability to be nimble, basically. All right, well, like if the head of your of your fund, if the head of your family office says we have to do this thing, right? Then you're going to then everybody's going to work their way through all the legal compliance, regulatory hurdles, operational hurdles to get it done, right? But until you have that buy-in from the very top, it's difficult to really get through all of that and still have momentum on your side.
So what do you say to people who are coming to you and say, $10,000, I missed the boat. I'm never gonna be interested in this. I'm not gonna put money in. Or what's your response to people who come to you and say that?
I mean, it's really it's so based on what your long-term thesis for the space is, right? Like if you force me to say, all right, well, like 10 years from now, is Bitcoin over or under 10,000, right? I'm going to say over. But for most people, you're not going to spend the next 10 years in a cave. So it's in the meantime, can you really, are you the kind of person who will gladly stomach a 50% drawdown or a 75% drawdown? That kind of determines a lot of your willingness.
So you still think that those are possible, and do you think we'll see those again, like kind of in the near future? Or I guess, we have seen a lot of 30% drops, I guess, usually when we see a rally.
Yeah, I mean, it's certainly possible. And if anything, this space, sort of the crypto market space, there's a lot of structural elements that lend itself to big moves, right? At the end of the day, the most traded instruments in our space are still like the BitMEX swaps, right? And so whenever you're in an environment where a lot of people are able to access a ton of leverage, right, then you're going to exacerbate moves. And so it's certainly possible.
Does the introduction of futures, obviously today LedgerX came out, the news they're going to be launching a physically settled derivatives product. Does that put pressure on the price, whereas maybe in 2017 that wouldn't have happened?
I'm not sure if the incremental effect right now is all that big. I think you can make a strong case that when CME came out with their futures, right, that gave a lot of people who wanted to short Bitcoin their easiest avenue to do it. Sort of before that, the hoops that you need to jump through are one, you have to be super involved in the space that you otherwise think is going to zero, right? You have to find somebody who's willing to lend you their Bitcoin for you to sell, right? And then you have to basically manage that relationship until you actually close out that borrow. And if all you want to do is say, okay, well, like I don't think this thing is worth anything, you're never going to do that, right? You're never going to get that involved. And so you can make a strong argument that like CME, it just opened up a new pool of money or opened up a way for a lot of skeptics to actually exercise their view. And so I think that really covered sort of the lion's share of the pent-up demand for that kind of thing.
Obviously, crypto economics, cryptocurrencies, really new fields, new terminologies. What's a question that you have that maybe you're thinking about today or in the last week or a month that you've been thinking about as just being something that you're chewing on in regards to the space? I
mean, really, for the last week or so, it's been this question of like who really is the marginal buyer, right? I think.
And what do you mean by marginal buyer?
As in, there's somebody who's actually buying this thing from 10,000 up to 11,000, right, and then 11,000 up to 11,300.
So somebody who wants to get in at 10,000, get out at 11.
Right. Like that's not necessarily like their price, their sort of targets, but there's somebody who's saying, all right, well, like this is a good point to buy it, right? And I guess like that's really going to who that person is really going to have a strong it's going to have a strong predicting factor on where we go for the next couple months.
Why do you say that?
Well, just because if that effectively if that interest is fairly ephemeral, temporary, right?
Okay.
Then
So are these new buyers committed? Is what you're asking, I guess.
yeah, I mean, not so much like committed. Yeah, sure. All right, fine. If they're committed, right? It's like
Committed to longer than 3 months, 6 months.
right? Or it's like, is this interest going to disappear if we just drop back down to 8,000, 7,000?
Oh, so you think people kind of last one on the train effect? Is that what you're talking about?
Yeah, a little bit, right? It's just
Okay.
like, okay, well, like this happens to be a headline right now again, so I'm interested. But as soon as it's dropped off my
The
my news
weak
radar,
hands, right?
yeah, sure, weak hands, sure.
Interesting. And so if there are a lot of those people, you would think that we would probably head back down towards one of the earlier price levels that we saw earlier this year.
I think it's pretty fair. I mean, right now we happen to be sitting at a level that we were sitting at last spring for a month or so.
So do you put a lot of stock, and I know this is controversial in the crypto space, looking at historical patterns. Is that something that you really go by, or what kind of faith do you have in those?
I personally put very little faith in that.
Okay.
Yeah, that's not really my cup of tea.
Okay, so when you're saying like levels, what constitutes like a significant psychological level?
So the extent of my willingness to kind of delve into this space is basically drawing horizontal lines, right? It's like, all right, well, if we spent a long time at the 8,000 range, right? That means that a lot of people either got in or out at that range, right? And so whether you like or not, there's like a strong psychological anchor to that level, right? It's like, all right, well, like if I'm only going to sell this thing once I'm above, once I'm in the money again, right? Then that 8,000 number proves to be somewhat sticky, or the other way around, right?
Something interesting I was thinking about is, if you look at it, because now that we're over 10,000 again, it's like if you look at the historical Bitcoin price chart, it's probably only like 7 weeks where you could have bought it and like lost money and be underwater if you didn't sell it. If you didn't actually like sell at a loss.
Yeah.
Which is kind of interesting.
Yeah, I mean, look, it's the reason why I think if you're willing to just not think about it for 10 years, right, you'll probably do pretty well for yourself.
Right, I think that's funny because I think we think about active traders all the time, but the people who seem to do best are the ones who kind of bought it and forgot about it.
Yeah, I mean, it's not bad, right? Like if you just kept it on a hard drive somewhere for the last 5 years.
Right.
You've done fantastic.
So I guess we didn't talk about really the halving. Is that something that's on your mind dealing with traders? I think I had a guest on earlier who was talking about they thought that this might have been the expression of that. So traditionally we've seen the issuance of Bitcoin. When that's cut, the price responds. Do you think that people are thinking about that this far out, or?
I think when it happens to be a headline, then yes, like people actually treat it as like some assign some sort of weight to it. Do I think there's like a real effect? Not really. Primarily because I don't think a lot of miners are viewing this as, oh well, like our supply is getting cut in half. Like our sort of reward is getting cut in half. That means that we have to somehow change the way we do business.
Something I've always been curious about, I'm curious if you have the vantage point from OTC, is the miners, it's sort of assumptive that they have to sell Bitcoin to pay their electricity costs. Is that something that actually still happens in practice? Do they do that, or do they just borrow against their Bitcoin?
I think it's all over the place, really. I've heard of deals where miners basically strike up deals with their energy providers, right? So that it ends up being some sort of revenue share model.
Revenue in terms of the actual Bitcoin.
Exactly, in terms of the actual revenue, in terms of actual Bitcoin. Or, really, you can even argue that some of these miners are just effectively like cost-efficient hedge funds, right? Like if you can devote your resources to sort of chip R&D, right? Chip R&D and buy Bitcoin at 4,000 instead of 11,000, right? And your goal is to hold on to this thing for 15, 20 years anyway, right? Like, why not do that then?
Maybe one thesis I have that you can possibly disprove. So when I looked at the big run-up and the big sell-downs, I always thought, like, man, like the incentives for the miners, they must just all stop selling Bitcoin at some point when it is going exponential. And they must all sell it at some point. Well, how do they stop from colluding at that point? I don't...
I mean, your guess is as good as mine.
Yeah, it's an existential question. But yeah, I guess, like, so how big of a force are miners in trading in your estimation?
I mean, they are easily the single biggest force. Whether or not they choose to exert it,
I was just curious if that was like still the perception. Yeah.
I mean, I think it's not the. I would say that it's not the perception right now. Yeah, there's certainly a point in time where just much earlier on, market was much less developed, and there are just fewer players.
Right. But they're still, do they still actually, in your estimation, do they still actually influence the price direction?
I think that if they wanted to, they certainly could. Right. And maybe, I think probably one development that's happened in the last 2-3 years that disincentivizes them from doing it is that a lot of them are probably extremely cash rich already. Right.
If you're, so they have a big balance sheet.
Exactly. If you have a huge balance sheet, like you don't need to be selling the coin that you mine right now necessarily, right? Like you already have a ton of cash on hand that you don't know what to do with. Why would you want more?
But wouldn't they have to have it sold the Bitcoin at some point to get the cash on hand?
Right. Exactly. They have sold it, right? Like they have sold.
Right.
But to the extent that they need to sell everything that they mine in order to just make ends meet, right? That's probably that point in the past. That was a point like far away in the past.
So I guess another topic that's come up a lot today is institutions. The idea that kind of institutional money will come in. How far along do you think their understanding is? I don't know how many institutions you deal with as OTC. What is your idea of their mindset currently?
I mean, it's been a kind of a slow trickle as always. Really the first movers in the space were sort of individual VC investors, family offices, folks who to speak to the earlier point, people who can basically be agile.
Okay.
I think you've certainly seen more involvement in terms of sort of secondary money in terms where people are viewing this now as an acceptable alternative investment, and so there are shops that are spinning up simply to take that interest. Folks who don't necessarily want to hold on to the coin themselves, figure out all the wallet situations or custodians themselves. There's an outlet for a lot of them now. But in terms of sort of general acceptance, I think we're still pretty far away from that.
Getting some questions here. Looks like it's just a bunch of people talking about Bitcoin and Satoshi's vision and Bitcoin. Maybe a question that I'm curious about. What are the metrics that you look at on a daily basis to understand what's happening in this market? Obviously, there's volumes, which have been kind of inflated. There's long and shorts, which people use. Are there specific things that you look at on a day-to-day basis to check the pulse?
I mean, outside of sort of where prices are and like where things are relative to Bitcoin, that's
all the best we got at this point.
It gives you a pretty good view. I mean, at the end of the day, this thing is still a pretty random walk, and so I don't know. Like I try not to put too much stock into one day's action either way.
All right. I think that'll do it for us. YinFeng, appreciate the time.
Yeah,
Great conversation.
Appreciate it.